From death crosses to a golden opportunity, analyzing Bitcoin's path forward. Hey guys, it's Keith Allen. Glad to be back after a long holiday Labor Day weekend. Got to sneak out and do a little fishing, which was always fun, and back away from charts, which is also kind of important from time to time. No doubt that August was just really one of the most volatile months we've had in a while. And we had that rejection from the 2021 top back in towards the end of July. Then we had that cascade punctuated by the August 5th sell-off down to 49.5K, 49.5K, and then a bunch of death crosses kind of coinciding with that. And then most recently, a golden cross between the 100-week moving average and the 200-week moving average. I'm going to show you all these things on the chart, kind of illustrate how we got to this point and where things could be going from here. I really think now that we have all of the chaos of August behind us, you may or may not like this news, but I think that September is shaping up to be as wild or potentially even wilder than August was. So without further ado, let's climb into the charts. But first, as always, if you like the streams, do me a favor, smash all the buttons, hit that like button, hit the share button, and by all means, please share a comment. I love engaging with you guys, and I appreciate all the support that you guys have been showing me. On that note, live comments are open. If you want to join the chat, join the stream, by all means, hop on in. I'd love to engage with you. So let's see what's going on here. First, I'm going to start, I think, on the candle chart today, and we will, of course, get into FireCharts and look at the order book and order flow data. But I want to kind of take a review of kind of how we got to this point and show you these crosses that I've been talking about. All right, so as you can see, we're looking now at the daily Bitcoin chart. Trend Precognition signals are up, and we'll look at the weekly and monthly as well to see if we have any new signals to share with you there. We do have a tentative signal here on the daily chart, which is also leading into what appears to be a rejection from the 21-day moving average. Not surprised there. Really would like to see us get past this and start working on these, but at least we're still in this range of interest. The death crosses that we were talking about, I could probably illustrate those even better here on this chart, which has quite a few of them. We talked about in recent weeks. We had a series of 4 come through in about a 9-day period. That was the green 21-day crossing down below the 100-day, and then we crossed here the 50-day crossing below the 200. That was a big one. And we had also the 21 continuing to really cross through everything at this point. And then most recently, towards the end of the month, we had another death cross between the 100 and 200-day moving averages. Those, of course, lagging indicators, but really kind of point towards an extension of the downtrend. And, at some point, things have to bottom out. So did they bottom out here, or are we going to see a potential retest of this or even lower here when it's all said and done? So these are all inherently bearish looking signals here, of course. And then there's one more that happened. We kind of saw this on an eminent path last week, and we are confirmed here as of Sunday that we do indeed have a death cross barely happen. A golden cross barely happening here between the 100-week moving average and the 200-week moving average. This is something that has never happened in Bitcoin's history. So this is a potentially this is a bullish sign. We have seen this happen on the S&P 500 a handful of times in its 150-year history. But this does not mean, all right, we're shooting straight up from here. What this means is that Bitcoin, or at least if history on the S&P is any guide, it's an indication that we are at or near a bottom, and potentially we just need one more flush. Okay. And the reason that I say that is because as I look at the history of this move right here, this is, again, we're on the weekly time frame. We're looking at the 100-day moving average crossing above the 200-day moving average, and we have no history of that here on the Bitcoin chart, but we do have history of it on the S&P chart, which I showed you guys last week. But I want to show you something here relative to some of these other death crosses and what we're seeing here. The golden cross kind of indicates, like I said, that we're at or near a bottom, but we might need one more flush. And the reason I say that is the history of these moves. Death crosses are inherently bearish until they bottom out, and then at that point it's bullish. And if we look at the history of some of these major death crosses, they lead to they lead to a bottom, whether that bottom is close to a local bottom or we're moving into a full bear market and we have to go deeper, remains to be seen. There's a mix of that here in the chart, as you can see, but double bottoms seem to be prevalent in these situations. As you can see, as we go back in history, at least on the Bitcoin chart, and we can see coming off of death crosses between the 100 and the 200 daily, that we often see double bottoms like this that establish a bottom and bring us into our next leg up. Here we are again, coming off of the 2013 top into a double bottom here, and Bitcoin finds its way up before a rejection here, and that's worth noting here because that's something that we have to watch for. A rejection at the 200-day that sent things back down. This obviously was a bear market at this point. We did get some rallies here, but the rejections off of the key moving averages were an indication that things weren't quite done. So again, look at this double bottom. This was the death cross between the 100 and the 200. Here was the double bottom. It took a long time for this to develop. And if I've learned anything here this year, patience is key in this game because pretty much every move has taken longer to develop than I expected, with the exception of the run up to our current all-time high. Coming off the 2017 top, similarly, here was again that death cross and a little brief double bottom here, leading to a rally, rejected again at the 200-day moving average. Those rejections are indication that obviously the downtrend is going to continue. This, of course, was full bear market territory. Coming off the 2019 top, we saw again double bottom after this death cross between the 100 and 200. Things started to recover here off of this double bottom. We had, of course, the COVID crash. I think that's an anomaly. I think if this didn't happen, then this trajectory would have continued upward. You may have different views on that. This really changed the entire dynamic of the market. Really changed a lot. We had money printing going on. We had a lot going on. We had unemployment spiking and then recovering very quickly. And of course, the market that followed. Coming off the 2021 mid-cycle top, a lot of technicians, as I've shared with you before, consider this to be the top of the market. We double bottomed here before a distribution rally took us into a new all-time high. Here we are again, things breaking down. There's that nasty death cross, and that was really a confirmation that the bear was in control. That was a bear market here, of course, bottoming out here after the FTX crash in November. Also kind of a unique event, right? Something that nobody really expected. Well, we expected it just before it happened, but that was a surprise, took the market by surprise, and we got that correction down to that 15K level. And this is the recovery that we've seen since, right? There have been a few brief moments where we had that death cross came back after things were unwinding here. We did get that death cross again, brief shallow test of support, a double bottom, and the trend line here made for a nice bounce up. And here we are. Again, we have the death cross between the 100 and the 200-day moving averages. And so my question here is, will we see this recover from here? Will we see a retest of support here for the double bottom, potential bounce here at this 4950K level? Or are we going to potentially go lower into this trend line? And if we do that, what happens if the trend line breaks? These are not new topics, guys. We've discussed this for a long time, and we know that we have areas of prior consolidation that we had focused on. I'll switch over to this other chart for that. That if things do break down, I'll take off trend precognition for a moment. We'll get into that in a second, but we do know that if things do break down from here, right, we do have the trend line. We do have areas of prior consolidation. This is the 50 to 52K range, which was tested here. This to me would be any of these would really be a solid bounce here as far as I'm concerned. I like this range here. I've talked about it for a long time, this 40 to 45K range. I still think that we have, relatively decent confluence here where that could come into play. I think that would serve as a fantastic foundation for the next leg up. But I'd be just as happy if it came from here. What I don't like about this, I mean, I do like that we have consolidation here in this level. It's kind of at the bottom of this consolidation range, and this consolidation range, as you can see, has some historical value to it. So it's good that we did get a close here on the monthly, and let's go ahead and look at that now. Our monthly close was red. I was hoping we were going to get a doji hammer out of this. It really didn't develop the way that I wanted. We got a lot more candle body to it as things, as the close entered support rather than near resistance. But the upside to that, the good news of that is we did get a close above this mid-cycle top where that closed. That closed at 57,775. It opened. That was the monthly, right? 57.75, and we closed here at excuse me, am I looking at the right thing? One second. Make sure I'm on the right chart. Oh, you know what? This is it. This is good. So here's that mid-cycle top, right? This closed at 57.775, and we closed here actually right below it. Not sure what I was looking at earlier. I think I was looking at I must have been looking at the weeklies earlier. And in that case, where were we? Because either that or I'm losing my mind. Yes, I was looking at the weekly earlier. I'm sorry about that. 56,281 is where we closed that week. So we did close above that. But this is not a sign of strength. The close that we had here on the monthly were not fantastic. So I want to switch trend precognition back on here and take a look at potential for new signals here on that monthly close. Always watching these, right? So here's what we got. We got a down signal, and this is tentative, of course. We got a down signal on the weekly, which indicates the price not likely to climb higher than last week's high. I will tell you that recently we've seen some of the indicators getting invalidated because we've had some funky price action and maybe some how should I say, choreographed moves along the way. So I watch this closely, of course. This signal has gained a little bit of strength since it opened on the first. So I'm watching that. I think this is probably a pretty solid signal on the weekly. In terms of the monthly, we did not get a new signal, but we did get a slight upturn in the A1 indicator, which indicates that, hey, maybe bears are losing some momentum here at this point, and that we might be hovering around a bottom. Now, it was largely believed when this happened that this was the bottom. So that retest, as we discussed a few minutes ago, would be pretty awesome right here, right? That would validate that. So what I don't like about this is that it's not in that double bottom territory. We haven't retested this. And so I would feel much better about this current move being a leg up if we had double bottomed here or potentially even made it to this trend line here. So in light of that not happening, I think it's still on the table for this month. And we have a few things that we need to keep an eye on that might influence what's going on. Number one, we always, of course, watch ETF flows. ETFs had a pretty rough week last week. Going to be interesting to see if that changes today now that price has dropped down a bit. We actually had some suppression happening in the order book over the weekend. We can see that I initially thought this was going to be guardrails here up at the 62K level, and then down here at the 58K level. And what happened was this converted into a ladder, right? This got pulled. Then we saw this ladder of ask liquidities pushing price down. I really felt like this was a move to kind of a multi-pronged attack to load up some shorts to potentially squeeze and push price maybe to get filled a little bit lower. So not surprisingly, we're seeing some of this lift here as TradFi opened today. We, of course, had a long holiday weekend. But look at what's happening here, right? We had a rally last night after the close up to about 60K. And now we see yet another dump. And if we zoom out a little bit, we can see that the order book really is shaping up for continued volatility here through the month, in my opinion. If we filter out some of the low volume here, just to kind of focus on the areas with more liquidity, we can see that the deepest concentration, which is building, by the way, at 50K, and we're actually fading a little bit here at the 70K level. And I've been saying all along that we need to see this continue to fade. That fading, sometimes it is liquidity moving, sometimes it's liquidity dropping into the active trading zone, and sometimes it's just getting pulled. And whatever the case, we need the bid side to be brighter than the ask side to have a legitimate shot at moving up through this. At the moment, it looks like Bitcoin wants to test support. We haven't visited this 55K level in a while. There's a little bit of bid liquidity there. But I really think that, this is going to be easy to break through, and that this test of 50K is still in order and likely on the books. So something else that we have not considered here, and I think this is really worth noting, something to consider. We have this red box of interest, this area of historical importance up here, right? And the fact that the price still is hovering in this range is, to me, notable because, and I don't hear anybody talking about this, and this surprises me a little bit that we don't hear anybody talking about it. Mt. Gox distributions are still going on, right? Since June, July, they started distributing billions in Mt. Gox coins, and that continues, right? That distribution is scheduled to continue through October. So I'm having a hard time getting an accurate read on how much has been distributed. The last story I saw on it was back in July, after the Kraken distribution had completed. I think they had said that about 40% had been distributed, and now, according to my favorite AI platform, it's estimating somewhere in the 60 to 70% range has been distributed. This again will continue. So we're talking about what equates to, I think, roughly around $9.5 billion being distributed throughout this phase, which will continue through September and into October, decidedly. So we still have that ongoing sell pressure. And the fact that price has maintained up in this level, despite all this sell pressure, is impressive to me. Now, September has a bad rap. September has a history of being a bad month. And this very well may be a bad month for September, but there are some silver linings to look for, potential silver linings to look for, and we'll get into those in a second. Looks like I get a bunch of comments in here from Crackdown. Nice to see you. Crackdown, I was looking for M. Bill. Good morning, my friend. Crackdown, nice to see you too. Let's see. What's Crackdown wants a 50K swing long, please. Yeah, that'd be nice. I think that retest is in order, and so we may get that, and that may actually be the next leg up if we get it. So, yeah, be careful with that all in, my friend. Be careful. I like DCAing into these things. I'm going hot in the fire. MBL is saying I'm expecting a big trappy movement on 917 to 920. 917 is lowering interest rates, but 20 is the BOJ interest decision. Important, that's an important topic, and one I was going to cover, and one I almost did the whole analysis on that this morning, but I was going to save it for later. I decided to save it for later in the week. Um, so I think that the Fed decision actually comes out on the 18th. I think is when Powell's announcement is. Let's see. I actually have that date here. FOMC begins earlier than that, but the actual press conference is going to be on the 18th, I believe. Let's see if I have this. 17th. Okay, so the Fed press conference is on the 18th. FOMC begins ahead of that. They meet for a couple of days, and then the actual discussion will be on the 18th. And so, is that when the Fed is going to cut rates? We're expecting a quarter point, maybe maybe a half a point, but I think the market personally, I think that the market wants to see a slow and steady series of cuts, which would indicate less panic, less fear, less concern that we're late. Now we have a unemployment number coming out on this Friday, which is going to be the subject of another analysis this week. But I would think that this is really going to be something that the Fed is watching very, very closely, and something that is likely to trigger some volatility. We're sitting at 4.3%. I think that we are in the good news equals good news, bad news equals bad news phase of things at this stage. And that, if we're flat, market's probably going to be okay with that. I think things are going to be taken in context of, non-farm payrolls and also participation rate and weekly out, all these other elements that could feed that. But what the concern is we have a spike in unemployment, right? We already know that employment is bumped up, and historically, when unemployment starts to bump up, it continues to go higher and higher. We're in a different situation right now. The Fed is trying to thread a very tight needle, and obviously trying to keep unemployment under control. Their dual mandate, they wanted to see that bump in unemployment to commit to a rate cut, because quite frankly, it's the only tool they have. The question is, are they on time? They're still going to be able to do this, or are they too late? And that remains to be seen. But I think that if we see a bump, especially 2 basis points or more, then we're going to see. Well, I should say, if we see a bump, if we see a bump of 0.2%, 0.2% or more, I really think that the market is not going to like that. 0.1%, I don't know. Maybe the market kind of analyzes that with everything else and says, "Hey, it's manageable." I honestly don't know the answer to that, but I think flat is going to be okay. Cooler than expected. That may trigger some scrutiny over the numbers, right? And we've had that throughout the year. People have been questioning the accuracy of the numbers, and I think that if we see a lower unemployment number, then that probably would probably trigger some more scrutiny. So what have we here from XBT? Part of the thing to consider about the 100-week and 200-week golden cross is that it had never happened before, because the 100-week was never below the 200-week. The only death cross between the 100. Right. This is the only time it's ever happened. And last week we looked at this on the S&P 500, because it has happened about eight times, I think, in the S&P's history. And that's about 153-year history, by the way. So we talked about that last week, and you can go back and look at that analysis if you want to see it. But that's really what led me to the conclusion that these events often lead to double bottoms that climb us out. So I think the long and short of this is, no pun intended, is that we're closer we're probably closer to a bottom than we think, or closer to a bottom than further. But I think that we need this retest here to validate that. And if this doesn't hold, then the trend line, is my next level, which has that confluence with that prior consolidation range in the 40-45K range. And if that doesn't hold, then then we just move down to the next levels, including that prior consolidation range and that 25 to 30K level. I do like the fact that the 21 month moving average is pulling up near the trend line. So we could, over time, if this consolidation continues here, maybe it continues through September, maybe it continues through October with the culmination of the Mt. Gox coins distribution ending. Who knows? And then, of course, November, we have an election cycle happening. So that is what it is. Let's see. XBT adds on the Mt. Gox story. Problem with the Mt. Gox story is that it's not clear how much is actually sold. It's been distributed to users, but that does not mean sold. And this is absolutely true, right? So we can assume that, well, we know that all of these creditors are in fat profit, right? I mean, Mt. Gox, I think Bitcoin was at triple digit prices back in those days, right? So they're all in fat profit. And some may sell a little bit just to realize some gains, and others may just let it ride at this point. It was a forced hodl, and it certainly paid huge dividends for them. And I think that maybe the dynamic of how this market works here might determine whether more of it gets sold or not. I think if we start seeing some strength and price goes up, then we might not see as much selling as if we start to see things really break down, meaning we potentially lose the trend line and head into bear market territory. Then you might see some more profit taking out of that bunch. That remains to be seen. But a great point, XBT. I appreciate it. And Bill comes back in. Overall, it's a shaky season. Nothing's going to fall apart. BTC probably going to break the support, but so what? Well, and that speaks to a long-term, sounds reckless, but really it speaks to a long-term view. And if your long-term view is that Bitcoin is at some point in time in its life going to be a 6-figure asset or a 7-figure asset potentially, then this doesn't bother you, right? This volatility, these downturns don't bother you. If you are day trading, or if you are betting your family's mortgage or future, I don't recommend doing that, because we could see things break down further in the short term. I was reading some after seeing some crazy speculative numbers from Van Eck over the weekend that somebody had posted in our Telegram community. After seeing some crazy numbers of their projections, right? Their worst case scenario was something in the 130K range, which is certainly reasonable and potentially a top of cycle number if we haven't already topped here this year, up to a mid to high 6-figure number, and then something ridiculous for their base case. And then their best case scenario was something like $52 million Bitcoin, which is just nuts to me, right? I don't know how anybody can speculate a number like that. I think that their forecasting may be coming from a weatherman who, those guys barely get it right. Nonetheless, after that discussion, I was reading some stuff from Warren Buffett, who basically says, if you're investing, investing versus trading, if you're not prepared, if you're a long-term investor, you're not prepared to see some serious drawdown, close to, 50%, then you probably don't have the stomach for it. And that's how he has been successful. So if you are a long-term investor, then you potentially, can DCA your way down to zero and do quite well over time if you don't need that money anytime soon. but we're talking about a very long-term horizon. I'm not talking about 2 years. I'm talking, you know, 10 years, 20 years plus, right? To see where Bitcoin really, really goes in terms of its long-term future. And so much is going to change between now and then, not just economically, but geopolitically. I mean, the whole world is evolving or potentially devolving right now. That remains to be seen, but a lot is changing. Is my point here. So, um, 55 move. Nice to have you here, my friend. And Bill says hot dog's going to cost $500 if their best scenario is right. Yeah, right. The Costco dog could go up to $500, right? Well, if that's the case, I'm glad I'll be holding Bitcoin and I'll be able to afford it. But no, I think those numbers were just crazy. I thought it was funny to see them and talk about them. So I want to go back to let's real quick go back to Trend Precognition. And on the monthly, as I said, no new signals here, but this slight uptick in the A1 slope line is interesting to me, as is what we're seeing here on the weekly downtrend. Obviously, right, but look where we're bottoming out here, and that's interesting to me. Again, because of the history in this range, we've got a lot at this level. So there's some confluence here at where the support level is happening right now. And so I again have my eye on a potential retest of support, a double bottom here at the 50K range. The market is expecting a dump in September. And because the market is expecting that, we may or may not get it. And the market is also expecting a rate cut later in September. And we know that that is going to trigger some volatility. Uh, we'll do a whole nother analysis on the history of rate cuts and price action maybe later in the month. But we've talked about it in the past. But I think that between now and then, the order book is definitely ripe for some volatility. Okay. No question about it. And it would be, yes, we could very easily see the bottom of the range and the top of the range between now and September 18th, and certainly between now and the end of those Mt. Gox distributions, right? So, again, as XBT3 pointed out, those Mt. Gox distributions don't necessarily mean that people are selling. They're certainly not selling all of it in most cases, I would think. But we can't assume, we do know that it means that more Bitcoin is coming into the market, right? It's re-entering the market. Whether it makes it to exchanges or cold wallets remains to be seen. So if anybody has any insight to that, maybe someone from Arkham can shed some light on that. That would be really interesting. But for now, this is what I'm watching for. And I'm watching for this liquidity to continue to move around here, as we saw here over the weekend. You know, whales love gaming this stuff, and I don't expect that to stop anytime soon. And we also have some interesting metrics that we might look at here in the MI dashboard that I think can speak to what's going on. And that is, number one, that we do have beta on the rise here, which often signals that we are close to they were close to local bottoms. So, you know, we were toppy here a little while ago. We had a nice consolidation here. We're entering a phase like that once again. So this kind of solidifies this range. Doesn't mean that we can't go and test that 50K level, but it does show us that maybe things are shifting back a little bit. Bears losing a little bit of momentum as bulls try to regain some strength here. And like I said, liquidity on the move, right? You got to keeping an eye on the order book, and FireCharts is great for that. We can see where liquidity is moving, and that often leads us to other moves. We have a brand new block bid liquidity just showing up here at 56K. We can see that brown mega whales just sold into this liquidity down here. They've been kind of dormant for a few days, and purple whales, which have really been kind of the dominant class for Bitcoin. Let's zoom out a little bit. They were selling quite a bit over the weekend. and looks like they continue to do so. Came off the bottom, came off a little bit, but um, I think that they're going to game this thin liquidity here, drive things down, push things down lower, buy at these levels, and potentially push back up. And we could range up and down until we ultimately go down and retest 50K, which is what I would love to see happen. I think that's a lot to chew on for now, guys. I'm going to leave it right there. May have another update, actually another analysis coming up today. I think we're supposed to do the blockchain banner this afternoon. So be coming in with another analysis and some more perspective throughout the day. And of course, as I see things develop, I'll do my best to keep you updated. If you like the streams, please do me a favor. Please do me a favor and smash all the buttons. Hit the like, hit the subscribe, so you never miss an update. And please share these things so that you can help me grow the channel. Thanks again, guys. Appreciate the support. Make it a great day. And hey, it's going to be volatile. Look for those opportunities and trade safely, my friends.